Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your weekly technical analysis of LME 3-month nickel and zinc. I'll start with LME 3-month nickel. Okay, still a bit of a long commentary. There's a whole lot to recap and discuss and limited time to do it in. I'll try to keep it short. So, the basic drivers are the same here. The market has been driven higher for many months now by the same key patterns. They are the middle tine, currently 17,485, and most recently by the upper tine, currently 2980, of the huge yet shallowly bullish 2017-2018 bullish shift pitchfork. The upper tine had capped the market back in September, October, and last week, though it has been assisted when breached. The next pattern is the October 2020 to March 2021 bullish shift pitchfork, notably the lower tine in September and October, and that's currently at 18,420. And the middle tine has resistance in October and last week as well, and that's currently at 20,735. These second set of tines have shown the more recent bullish angle of attack. The lower tine was support back in April, late September and early October, in conjunction all of the time with the slowly rising long moving average, currently 18,380. And that's something to remember. Now, I appreciate that many lines are obscured by labels, but please believe me, these will become clearer should the market approach any of them. I'd like to remind you once again something I originally said now some 18 weeks ago, and I quote, "Whilst these two pitchforks are in operation, this market will still have the bullish incentive, even if it sometimes looks like it is missing." End of quote. Thus, these are the core drivers of this mildly bullish market. Okay, so moving to some more recent overall action. If we look at the September action, a number of key features pop out. To start with, the high and low of September back, which by the way resulted in a monthly key reversal up for the month, also helped draw a newer bullish shift pitchfork for the April to September move. This pitchfork has already seen action, with the middle tine currently at 19,995 recently acting as an attractor. Now, this middle tine also acted as a base early last week for a significant move higher, up to test the previously mentioned middle tine of the October 2020 to March 2021 bullish shift pitchfork, as well as the upper tine of the 2017-2018 bullish shift pitchfork. Now, hold on to these thoughts for a moment. I said 6 weeks ago that this was all getting very, very, very interesting now. The reason, and it is still valid now, is because of a key piece of action. You see, while September, if you remember, was a large monthly key reversal down, October, on the other hand, was an even bigger immediate countering monthly key reversal up. This has led to the latest addition to this complicated mix. I revealed this 4 weeks ago, and is to look at the whole action from late June to date as a really huge, really big diamond pattern. I admit it's a little lopsided to the top right, but I hope you can see what I'm talking about. Now, diamond patterns can be tops, bottoms, or continuation patterns. This one can only be a top or a bullish continuation pattern. So to the details. The diamond has a lower uptrend trend line, currently 18,765, and an upper downtrend trend line, currently 2820. As you know, I have been paying close attention to these two key trend lines, and the upper trend line, downtrend trend line, was breached last week. Yet it appears to be a false break higher, as there were only 2 days the market was above it, and there were no closes above it, though there was a close on it last Wednesday. Interestingly, the subsequent pullback only dropped as far as the congestion around the June and September highs from 2014, respectively 19,995 and 19,940. And that's where the price have not held. But yesterday made a bullish harami, and today possibly a hanging man pattern, all based around the middle tine of the April to September bullish shift pitchfork. This may set up the scene for another possible threat to the upside, to the upper downtrend of this diamond pattern, but we shall see. The question now becomes, will it be real if it happens, or another false breaks? These are the current forces at play here, in what is in reality is a very confined space, despite ostensibly and superficially some wide ranges. Additionally, all this has happened and is happening in a relatively short period of time. For example, 2 weeks ago we had a weekly key reversal up, which is how we ended up with now talking about the upper trend lines for the diamond pattern. Overall, watch the top side, as it may well become crucial. LME 3-month zinc. Okay, so prices had since mid-October travelled down the far side of the mountain for about 3 weeks, such that we're finished with that. Last week was the first real week that we've seen prices start to climb since early October, though the action was limited. The market ran into a congestion band made up of some resistance levels, the April 2018 high at 33.02, as well as a lesser Fibonacci level. This stretched all the way between 33.02 to 33.66 and capped the rise, such that prices dropped down last Friday almost down to the support of the gently rising medium moving average, currently 31.37. Remember that one. There was one other factor, one that I've kept on despite it being broken, as it's given a pretty good account of the bullish angle of attack of the market up till now. It is the old May 2020 today optimized uptrend, currently at 33.22. Along with the assistance of the rising short medium moving average, currently 32.53, this optimized uptrend had previously shown the bullish angle of attack for many months before, until it stopped working in early October due to the market shooting up and making the mountain. However, it seems the market is interested in reacquiring it, especially it seems once it clears the 33.02 to 33.66 congestion, which it will do in a couple of weeks' time. Now, an additional factor, and one which I have already mentioned. A little below, we still have the rising medium moving average. Yes, that one, currently at 31.22, which at the rate which is moving higher will continue to be an underpinning of this market unless it is seriously challenged. This factor had prompted a big question, one that I had outlined 4 weeks ago. It was whether the recent action, specifically the mid-August to mid-November action, is a bump and run reversal top. I've previously drawn a bump and run reversal top trend line, currently at 30.53, just in case. And the reason I deliberately mention the medium moving average is the bump and run reversal top trend line lies in between the medium moving average and the rising long moving average below, currently at 30.19. It is also in the midst of the congestion support from May to September between 28.53 and 30.92, but it is slowly, ever so slowly, working its way up and out of that, which might allow us now to see how strong these two moving averages and this singular trend line really are. Right now, these two moving averages and the bump and run reversal trend lines seem good enough to hold prices up. The longer the market stays above the medium moving average, the more chance the bearish bump and run reversal top will continue to fail. Thank you for listening. This weekly broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.